Hello.
The product costs for a manufacturing business are first reflected as part of the cost of inventory, and then as cost of goods sold as that product is ultimately sold. And we suggested that there are three phases of inventory in a manufacturing business for the accumulation of these product costs. And so let's designate them here in the format of a T account, because we're going to be accumulating costs and ultimately reflecting these costs in our financial statements. And so we'll keep a general ledger T account for these phases of inventory. Inventory for our raw materials, the inventory for work in process, and the inventory for finished goods. And what I want to do now is kind of, map the flow of costs working through these stages of inventory. For example, in order to manufacture and produce, these 5 tables, we're going to need materials. And the materials will be, oak lumber and various finishing products, including, varnishes or paints or stains and these kinds of things. And so we're going to need some materials in order to make this table. And so we're going to have to purchase some raw materials. When raw materials or direct materials are purchased, we're going to be debiting inventory, designated as the raw materials inventory, and crediting cash or accounts payable as we pay our suppliers for these materials. Then as we actually start to manufacture the table, these oak tables, we're going to take some of these raw materials out of our raw materials inventory, which actually will be an area in the manufacturing facility, and we're going to put those materials into production or into work in progress. We'll do that by actually crediting the raw materials inventory account and debiting work in process inventory for the cost of the materials actually put into production for these 5 oak tables. Then, in addition to these direct material costs, as we begin to work on the table, we're going to incur direct labor costs, which will also be debited or included in the accumulation of the cost of our inventory, work in process inventory. And we'll credit cash as we pay our laborers, or wages payable as we incur the obligation to pay them. In addition to the materials and labor, also included in the cost of inventory at the stage of work in process will be all of the manufacturing overhead costs associated with the production of these 5 oak tables. And we'll be debiting inventory, work in process, for any of these manufacturing overhead costs, and crediting cash as we pay these costs, whether they be rent or salaries to supervisors or whatever. And remember, they might be indirect materials and indirect labor and other manufacturing overhead costs included in this manufacturing overhead. Once, in fact, we've completed the 5 oak tables, we're going to then take this accumulated cost that has been building up in work in process inventory and take it out of work in process inventory because it's no longer in process. We've actually completed production of the 5 oak tables, and we're going to transfer those costs and probably transfer the oak tables physically from the work in process area of the factory into an area set up for the finished goods awaiting delivery to the customers. And so we will credit work in process inventory as we complete production of the 5 oak tables and debit the stage of inventory referred to as finished goods inventory for the total cost of those 5 oak tables. Ultimately, when we ship those tables and sell them to our customer, we're going to be crediting this finished goods inventory account and debiting cost of goods sold. So again, as I said previously, all of the product costs of manufacturing these tables, all the manufacturing costs, materials, labor, and overhead, will be accumulated as part of the cost of inventory, whether it be raw materials, work in process, and ultimately finished goods. and ultimately reflected as an expense when in fact we sell that inventory by crediting finished goods inventory and debiting cost of goods sold. When we talk about the flow of these product costs through a manufacturing business, you can tell that where the real action is in work in progress inventory. I mean, that's where we're actually, building the product. And that is where we're accumulating all of the costs associated with the manufacture of the product. That's where we're accumulating the direct materials and direct labor and manufacturing overhead costs. Now, I'd like to take a moment and actually look in the general ledger of a manufacturing business now and identify and spend a little bit more time talking about work in progress or work in process inventory, WIP, as it appears in the general ledger account. Again, this is where really all of the accumulation of costs relative to the manufacture of a product are taking place. And if we look at a T account here that we might find in our general ledger under work in process inventory, you're going to see that we're going to be accumulating on the debit side of this account the direct material costs and the direct labor cost and all the manufacturing overhead costs associated with jobs of manufacturing our product that are in progress. And at any point in time, if we have draw a total balance, which would be the running balance at any point in time, if we were to simply, add all of the debits less credits associated with this particular account. This balance, this running balance of the work in process inventory account at any point in time is the combined amount of all of the direct material costs, direct labor costs, and manufacturing overhead costs for all of the manufacturing jobs that are in progress at that time. So, we may have, 5, 6, or a large number of different products in production, in work in progress at any point in time. And if we were to look at the general ledger account and the account balance at any point in time, it would include all of the direct material, labor, and manufacturing overhead costs for all of those jobs accumulated up to that point in time. Now, as I've previously discussed, we will also maintain a separate job cost record for each and every individual job that's in progress for, the different kinds of products that we're manufacturing at that particular point in time. For example, we might have in work in progress, in the process of manufacturing, right now, a job order referred to as job number 351, and we will be accumulating in this job cost sheet record for job number 351, the 5 oak tables. We will be accumulating as we incur the cost, the direct material, all the direct labor and manufacturing overhead costs, specifically for the construction and manufacture of those 5 specific oak tables. But we will probably have in production other jobs going on at the same time in our manufacturing facility. For example, let's assume we also have job number 352, and we're going to maintain a job cost record to uniquely identify all of the costs of job number 52, which we'll assume at this point in time is the construction of maybe, let's say, 10 chairs. So we'll also have, in addition to job 351, going on at the same time, maybe somebody else in the factory is building job number 352, 10 chairs. And again, it will be accumulating uniquely its direct material, direct labor, and manufacturing overhead costs. And we may also have, job number 353 going on, the building of, let's say, 2 sofas. And it will also be accumulating on its own job cost record or job cost sheet all the direct material, direct labor, manufacturing overhead costs associated with that job, and so on and so on. Let's assume that right now we actually have 5 different jobs going on. We're building tables and chairs and sofas and bookcases. And, we're maintaining the information in terms of the accumulation of cost relative to each of these individual projects on their job cost records, numbered from job number 351 to 355, okay? Now, what I want to suggest to you, and this is important, is that if we take all of these job cost records for these individual jobs, which is simply a different area of memory in the computer system, or, a sheet in a manual, accounting system, where we're actually accumulating just these material, labor, overhead costs, job by job, that are in progress, that all of these sheets on a combined basis effectively constitute a subsidiary ledger to the general ledger account for work in process inventory. In other words, if we were to take the total direct material, labor, and overhead costs up to this point in time in the manufacture of the 5 oak tables, job 351, and we were to add that total cost to the total cost up to this point in time in job 352, 353, 354, and 5, and add them all together, since those are all of the jobs that are currently in progress in our manufacturing facility, in work in process, and it includes all of the costs of materials, labor, and overhead. If we added up all of the totals in those job cost sheets, theoretically, it ought to equal the running balance total found in the general ledger account work in process inventory. So really, the general ledger account work in process inventory becomes the control account for a subsidiary ledger, the subsidiary ledger of which is all of these job cost sheets or records, job by job, for those products that we're manufacturing or in the process of manufacturing at any point in time.